Hang Seng is clocking in the biggest gains this morning. It's up around 0.7%.
I think 75 basis points is the more prudent move this time.
Mr. Girish Kousgi, MD and CEO of Canfin Homes, has resigned on account of personal reasons.
The only logical trade in this market is buy the dip, but in the economy-facing stocks.
It's one of the only major liquid markets where we expect GDP growth in excess of 7%.
Fact of the matter is that the Reserve Bank is not considering this at the moment. Sources close to the central bank told us, and I'm quoting verbatim, this issue is not on the table right now.
155 points higher, 158, the bank nifty 400 higher. We continue to remain very, very constructive on the market.
We were the first to manufacture tranexamic acid in India using the Japanese technology.
We're up about 1.4% on the benchmark indices, the Nifty higher by 250 points.
The objectives for us were to really establish Sustain as one of the top players in renewables in India.
So the mid-cap index is up around 1.8%.
Good afternoon and welcome to Closing Bell. I'm Anuj, with me, Prashant and Nigel. What we have in our market is something we've become used to seeing. On bad global days, the markets don't fall, and on good global days, the market just goes to the races, and this is what the market's done. You sometimes run out of words for this market. Just relentless, this move. And like we discussed in the morning, there are still shorts in the system, and most of them are now beginning to throw in the towel, especially from the FI side. The FI short positioning, my senses, could have come down even further today. And as you can clearly see, big buying in FI-driven stocks, large financials like HDFC, Bajaj Finance, these are the kind of names that are leading the market rally. Autos are doing well once again. That's been clearly the leadership pocket. And today, even pharma is making a bit of a comeback. Could be just a bit of a one-off, but out of nowhere, pharma stocks are now the top nifty gainers. And it looks like the market doesn't care one bit about what the Fed has to do or what the other dozen of central banks which are meeting this week or the next, want to do. They can do whatever. The market will go up.
In a way, this is good to see. But at the margin, you sometimes scratch your head and wonder whether this is really too good to be true or not, right? Afternoon, Nigel, hi. So that's where we find ourselves at. I mean, it's a bit of a catch-22. But we'll see. For now, it's a strong 250 odd points higher. We're back above that, trend line that we've been highlighting, and it's all looking pretty green all around. Market breadth is positive. Unlike, there've been 1 or 2 days over the last fortnight or so when the Nifty was up very strongly. The breadth kind of did not confirm, but it's 2:1 in favor of advances. More than 2.5:1 at this point in time. So enough and plenty of green action across the board today. Nigel, hi.
Well, talking about central bank action, everyone's talking about the Fed, but in the next 24 hours, you'll be getting, not 24 to around 48 hours, you'll be getting 16 central banks, 16, that'll be coming out with their policy decisions. And at the end of this month, you'll have the RBI as well coming out with our policy decisions. So plenty of central bank action. But as we said earlier, it appears as of now, the bulls, well, they don't care less for, what's going on that front. For the time being, we're virtually at the high point of the day. Plenty to talk about in the final 60 minutes. First up, let's run you through what all we have lined up. It's green across the screen with the key indices notching up gains above 1.5%. The Sensex reclaimed 60,000, while the Nifty trades above the 17,800 mark. All sectorial indices comfortably well in the green. To talk all things market and discuss key sectors as well as stocks, to remain invested in, we'll get chatting with Gautam Devgad of Motilal Oswal Financial Services from the sidelines of Motilal Oswal 18th Annual Global Investor Conference. In Market Opinion, we have Mehrboon Irani as well as Jay Bala of CashTheChaos.com. They'll be joining in to run us through what they think of the current market setup.
Okay, but how should you position yourself in this last hour of trade? It's been such a huge market for bulls. Even after gap up, if you would have bought, you would have got 100 points on the Nifty and 400 points on the Bank Nifty, which is not small. Mitesh, hi, good afternoon. Any more trades left in the last hour? Of course, from the day trade point of view, for positional traders, of course, it's been a delightful market. But how do you approach it now and your stock calls?
So, Anuj, you're right. I think, it's a delightful market. The only thing is that last 1.5 to 2 hours, we kind of settled down, but we are above 17,850. So I think that adds to the confidence. Therefore, look for stocks which are giving fresh breakouts. I've in fact tried to identify 2 of them. One of them is a cash stock, that's AIA Engineering. I think, that's a very strong price and volume action today. Buy here with a stop below 2650 for targets of around 2780. And the other one is Apollo Hospital, again a very big bullish candle with strong volume action taking place over here. That's the buy with the stop just below about levels of 4,500 and a target of around 4,670 on the upside can be looked at. So since the market vibe is positive, just if you're not in the index and if you've not been hitting the Bank Nifty as well, then I think the stocks which are giving fresh breakouts or which are breaking about the swing highs, I think that will be a good trade setup to trade.
Okay. All right, Apollo Hospitals yesterday, Fortis saw a very large move. The others did not, but today Fortis I think is flat to slightly lower, and names like Apollo are picking up pace. Mehrbun Irani is now joining us. Mehrbun, great to have you on the program as always. Thanks very much. So, I mean, what are your observations looking at the screen today? The kind of stocks which are making a move. Market breadth is pretty strong as well. Broader markets looking healthy. Your thoughts?
Well, I couldn't control a smile on my face when the way Anuj put it up to you that do what you want. I want to go up, we will go up. I think that is exactly the state of the market. I think over the last 2, 3, 4 months, 5 months, 6 months, in fact, since January, I think we have been discussing, everybody has been talking about a whole lot of negatives in front of us. And the market continues to show a lot of resilience. The dips are being bought into. I was talking to a person whom I know for many years and I respect his views this morning, and he was stating that why do you say markets have gone up? The reason he is saying that we went to 18,100 somewhere, we came down and we are still not reached that level. So it's the individual stocks which are performing. That's the way he was putting it across. The point is, Prashant, let's accept it, that 100% of the people who are in the market, investors included, and of course the traders are always there, they believe that we all know that the things are not very good. But we would wish to trade in the direction of the market, that as and when the negatives take its toll on the market, we will also shift our stance. But the point which people forget is that there is always a cost involved in that. The market will not give you an opportunity somewhere to exit at the highest of levels. So you have to believe in the fact that if my NAV is growing, the extra appreciation which I have earned despite the challenges in the global environment, I should be really one-finded to lose a portion of it, be it a substantial portion or part portion of it. So people are continuing to trade, like I mentioned earlier. This is the time where you need to wear the red hat of a trader and not think too much as an investor. There are sectors which I am strictly averse to, like a pharma or IT for that matter. There could be trading opportunities because they come down very sharply, and there are this capital goods space which I like, which seems extremely expensive in terms of valuation. So it's a clear question of a bottom-up approach. Distinctly possible that whatever the Fed does, if it's 100 basis points surprise, negative surprise, I think it is going to take its own toll on the markets, and India at that time could possibly react. But for the time being, I think the party is on, the music is on, and people are enjoying whatever is happening right now in the market while being selective.
Mehrbun, you said that you like the cap goods infrastructure space, I think. So what's your pick from there, if you could name a couple of stocks?
Well, I mentioned in passing that they are expensive. I like the story, certainly like the story. So the ABBs and the CNNs of the world look definitely very expensive. But there are names like maybe a Foseco India or a KSP Pumps. I think even despite the rally with the stocks have seen, they are at sub 30p, which in an economy which is going to show growth over the next 1 to 3 years, I think relatively the stocks look quite attractive. And if one searches a little bit more, possibly there could be some more stocks which could come their way, like maybe a Timken or something, Grindwell Norton or whatever. They're the great names. The problem is only the fact that they have gone up a little bit too sharply and they're not very cheap. So the story remains very good.
Mehrbun, good afternoon. What about Canfin Homes? How have you read into the news flow and how would you approach the stock now?
I think this is the second time that Canfin Homes is attracting attention for the wrong reason. And I think whenever such type of things happen, over the years I have seen with my experience in the market that the market somehow doesn't like it. There are some people, minority, who believe that this type of things definitely provides an opportunity, because ultimately a CEO going or a CFO going doesn't change the entire thing. But allow me to state that whenever you have any doubt in the market, in the company, for whatever reason, I think it's better to stay away. So this could be an opportunity, certainly yes, but I don't have the guts to go ahead and buy into it or recommend it.
Okay, don't have the guts to buy and recommend. Do you have the guts to buy or recommend Ambuja or ACC now, Mehrbun, at current levels? Of course, you did maybe 30% lower, but now?
I think they should turn out to be great stories. I think the biggest positive which happened was over the weekend, where the equity infusion of 200 billion by the promoter lends further credence to the fact of the targeted doubling of capacity, including ACC, to around 140 million tons over the next 5 years. While people argue with me, and I also feel that they are not wrong, the valuation based at current capacity of 33 billion tons is certainly looking a little stretched for the time being, at EV/EBITDA of around 23x. But the same looks attractive at EV/EBITDA of around 13x if you build in the targeted expansion to say 100 million tons, if you exclude ACC. I also believe that with the promoter putting in money, there are a whole lot of people who are ready to buy into it. I personally believe, and I continue to state the same thing, that stock, according to me, has decent room to go up further. It will possibly play the challenge of many people stating that it's looking a little bit stretched. The stock could correct, of course, here and there, but I still believe that somewhere the stock could go up at least another 10, 20, 30% higher than the present level, where somewhere what should happen in 2024-25 could get completely discounted in the valuations which the stock could command at that point of time.
Okay. Mehrbun, have you looked at, we had someone yesterday and we were having not a very detailed but fairly detailed discussion about defense as a space. Have you looked at any names here in detail? Do you own anything here out of the defense names?
I think the best name over here would be Bharat Electronics Limited. I think despite the fact that the stock has gone up a little bit too sharply for this entire space, I believe, and I've been believing, I'm a believer in this for quite some time right now. This whole space looks very attractive. The point is, Prashant, does this translate into numbers in your profit and loss account in a hurry? The answer is no. Have the stocks gone up too sharply? Answer is yes. Can they correct? Certainly yes. So if somebody has missed out, honestly, it's very difficult to say, okay, go ahead and buy into it just because the story is very good. It is exactly what IT was in January, where the story was very good, but anybody in the market was virtually owning 1 or 2 or 3 IT stocks. The same possibly is now getting applicable to defense. But the point in favor of the defense stocks, most of them are the liquidity in some of the stocks, be it an HAL, even a BEL, I think is relatively lesser, the liquidity, as compared to the most of the IT stocks. So maybe the downside of the correction may not be very sharp, but at this level, I believe that despite the story being good, quite a few of them are looking overstretched as far as valuations go.
Okay, all right. What about the biggest gain on the Nifty as we speak? Apollo Hospitals, the value unlocking has been taking a lot of time, but the management seems optimistic that things are still on the mend. Now, on a FY25 basis, the stock trades at around 20 times, 19 to around 20 times. Your view on the stock or from the hospital space, or would you, go in for an Aster DM, which are talking about raising some money, valuation-wise a little bit more comfortable, or do you stick with the largest name?
Well, I've not been a great fan of the entire pharma space or even the hospital space. If you ask me, and I remember being asked this question when Apollo Hospital had gone up a little bit too sharply all of a sudden to, I think, if I'm not mistaken, around 5,800, 5,900 rupees. And I'd mentioned that while it's a great company, the point is, at that level, I was not very comfortable because there's not much of money to be made at that valuation. But having corrected to the level to which I thought it should have corrected, around 4,200 level, I feel at the present price, I think there is at least 10 to 15% upside possible in the stock, because if you look at the valuations going ahead, it doesn't look very expensive right now for a brand like Apollo. And both its businesses, 24/7 as well as pharmacy, I think are expected to do relatively better as compared to what numbers were announced over the last 2 or 3 quarters. So I would say I would give it a slight thumbs up as far as the present price of Apollo Hospital goes, stating that I personally believe that could be at least a 10 to 15% appreciation from the present price over the next 1 to 3 months.
Okay, by the way, I just want to highlight, a couple of cement names are surging now. Just look at Heidelberg Cement, intraday chart of that one, it's up 18%. And Gujarat Sidhi is the other one where you're seeing a big move. Just look at that one. Gujarat Sidhi is up about 8%. Melbourne, if I'm not wrong, I think Heidelberg and Prism Johnson are two stocks in the mid-cap basket that you were betting big on, right?
See, I think, Anuj, if there are a lot of names being discussed, I think virtually everybody on the street is discussing at least 2 or 3 names. And I think more and more names will be discussed as we go ahead. The point is, as far as Ambuja goes, and you had asked me a question earlier on Ambuja, I think the closure of acquisitions at reasonable valuations would be a key factor in the company's growth strategy. As the sector leader, Ultratech, let's not forget, would also bid for whatever is available on the block. Now, coming to my observation, I think if you map the plants of ACC and Ambuja both, there is a big gap where ACC and Ambuja both are not present, and that is Central India. Now, people are talking of names in Eastern India or Southern India. Why should Ambuja, this is my view, if I was a management, I would think that way. Why should you go and buy something at expensive valuations in South India or in Eastern India where the demand is much higher than the supply? Coming to Mr. Adani's statement, I think he said nationwide player. I think clearly there's a big gap if you see in Central India. And in Central India, if you look at certain names, there are names like a Bella Corp, and there is a name like Heidelberg, and there is a name like a Prism Johnson. So if I was their advisor in any way, I would say that these are the names which you should look at. And relatively, if you look at, the stocks are cheaper. They have their own problems in the profit and loss account. Their profitability has been quite low. That's a different issue. But this look relatively cheaper than some of the other names which are discussed on the street, which are not in Central India and Eastern India or Southern India, and which look, according to me, extremely stretched in terms of valuations. So I really don't know which names will ultimately come out. But the valuation at which Ambuja will acquire whatever it wishes to acquire, and it could not be 1, it could be 3, 4, 5, 6, because the man seems to be in a hurry, because he is saying that I want to raise this capacity by 2030, and you don't go and set up too many greenfield projects at this point. So names will keep on coming out, stocks will keep on going up. There could be a trap in certain stocks, because quite a few stocks are going up very sharply because of expectation that, oh, Mr. Gautam Adani is going to take over, Ambuja will take over. But I think the closure of acquisitions and attractive valuations holds the key for the Adani Group's future as far as cement also goes. So I would not bet on stocks which have gone up too sharply, and I would consider on Central India. And the names which you mentioned, yes, I agree that these are the names I would target if I was sitting in that place, because Central India is a space where Ambuja and ACC don't have too much of a presence.
Okay, all right. Stay on with us, Melbourne. Let's move on then. We have biosimilar medicines that have been approved. In EU, they're interchangeable. That's the word that's coming in from the EMA. Biocon's stock in focus. Ekta joins in to run us through more details on that front. Ekta?
Thanks for that. Well, yes, the piece of news with regards to Biocon, and which Kiran Mazumdar-Shaw has tweeted about as well, is that the European Medicine Agency has said that biosimilar medicines which are approved in the European Union are now interchangeable with their reference medicine. So biosimilar medicines can now be interchangeable with an equivalent biosimilar. To put it into perspective, if in case you go to a chemist with a prescription which says, say, Crocin, until now, the chemist would only have to give you Crocin. Or if in case there is a generic name which is written on it of a particular drug, that is the particular drug that the chemist will have to dispense to you. With interchangeability, the chemist or the person who is giving the medicine will have the discretion to give you a generic equivalent of the drug, which is basically the generic version of Crocin, to illustrate it better. So that means that this would probably open up the opportunity or the market for Biocon when it comes to biosimilars in the European market. Remember that insulin glargine had received interchangeability status in the US. And before they received interchangeability status in the US, their market share was only in single digits. After they received interchangeability, it went up to double digits. So it's definitely a thumbs up. They have been very active in terms of launching biosimilars in the European market, such as their main biosimilars in their portfolio, Pegfilgrastim, Trastuzumab, as well as Bevacizumab. So this should definitely be a shot in the arm for Biocon.
All right, Ekta, thank you very much for that. Appreciate you joining in with that right now. 250 odd points higher on the Nifty. We are at 17,873. We'll take a quick break here. We'll come back and we have an interesting chat lined up on markets with Gautam Dugar of Motilal Oswal Financial Services lined up on the other side. Stay tuned. We'll also be joined by Jay Bala of CashTheChaos.com to discuss market technicals in a bit from now. The Nifty, so going very, very strong, 17,860. Jay Bala of CashTheChaos.com is with us on charts. Jay, great to have you with us here, as always on Tuesdays. Your sense, Jay, on what we are seeing. Late last week, we got a bit of a dip, but very short-lived, and those losses have all but been recouped. Your sense from here?
Yeah, thanks for having me on the show, Prashant. I think the markets are at a very important crossroads, and as long as the Nifty stays below 17,965 to 17,980, I think the markets have actually turned lower. But I know there is still the possibility that market could get higher than 18,096 that it made last week. But this is a slightly lower possibility. I'm working with the team that the markets have turned lower, but I'm not getting too aggressive. But it is this is probably the last time people are buying the dip, or should be buying the dip. If you bought the dip around 17,500, this is the time to get really cautious about it and position yourself for a possible lower decline. The reason I'm saying that is very important for the U.S. markets. It's actually, if you look at the Dow transports, they've actually signaled a new low for 2022. And so it's a matter of time before the US markets breaks the June 2022 low, and it won't stop there. It will head much lower. We are looking at 3,200 for the S&P and probably even 2,900 for the S&P. So in my opinion, the US markets breaking the low of June is just a matter of time. Probably 1 or 2 days, probably the end of the week, nothing beyond that. So be very cautious on longs here. So the banking index is the one that's making the difference here. If the Nifty banks were to stay above yesterday's low, there is still a possibility the Nifty bank might clock one more higher high. But that's going to be the differentiator between the bullish and bearish space.
Okay, Jay, you are clearly very bearish on the US market for sure. Good afternoon. So, on the Nifty, you're saying that as well that this should be the last phase of buy the dip and we'll play catch up. Is that what you're saying? Are you sort of suggesting taking shots or just stay out of longs? I mean, how should Indian traders approach it?
Yeah, definitely start staying out of longs from here, because so far, if you've done buy the dip from July, August, that's a perfect strategy, and kudos to you. And you should start getting really cautious about buying the dip from here onwards. But when short positions, I personally like directional trades, and I would like to position myself short here. So the key stock Reliance is actually giving some ominous signs. I hope that turn out the way it's actually positioned. So it's if you're aggressive, it's time to take short positions. If you are a little more conservative, wait for the drop to happen. Markets may not provide that opportunity, so that's the only problem, because the sharp decline that I anticipate for the US markets might provide a gap down for the market, and if you're not positioned short, you may not get the opportunity. That's the only problem.
All right, Jay, given that we have a big global event, I wanted to know the levels you're tracking on three asset classes. One on the 10-year US bond yields. Where is that headed? It's at around 3.1%, highest we've seen in more than a decade. What about Brent crude prices? Where's that headed? As well as the dollar index. Go ahead.
Yeah, thanks, Nigel. See, the US 10-year bonds have clocked fresh high for the year, and that's a level not seen for the last 12 years odds. So, it's heading for 400 bips more directly. I was anticipating that to happen in a choppy fashion, but the market is saying it's heading there more directly. And my medium-term objective has been 465 bips to 550 bips for the US 10-year. But this is going to have play out in say 12 months plus time frame. The dollar index, it's a bit not giving a clear signal, but the odds that it's going to head to 113 is slightly higher than the odds that it's correcting first to 104. So that's the theme I'm working with. When it comes to Brent, I think the medium-term trend is firmly down, But in the extreme short term, we could see a short-term bump up somewhere close to 112. But given the fact the medium-term trend is down, it's better to be nimble and play this if you're trying to play this.
Okay. And one last question then on IT. How would you approach it? We've seen quite a bit of decline, Jay.
Yeah, IT is coming to a very, very key support level, Anuj. I'm having two possible scenarios. One is that that's my primary case. I'm bullish on IT from a medium-term perspective. I think it's going to break the July low slightly and then turn around for the bullish phase for the medium term. But if the index doesn't hold above 24,600, that's going to be really not a good sign. Even IT might succumb and go somewhere close to 20,000 to 19,000. So I don't anticipate that to happen, but it's always good to know what happens if the market does something that you're not anticipating.
All right, Jay, thanks a lot for joining us. Good talking to you as always. So that's Jay Bala with a bit of a cautious view on the market. Gautam Duggad is head of research at Motilal Oswal. He's now joining us from the sideline of that conference. It's supposedly one of the big conferences happening now. Huge participation, like we had discussed with Gautam. Gautam, hi, good afternoon. So how have the first couple of days been and what's the feedback on India? Because nothing is stopping Indian market. It's clear. I mean, the market almost has no fear of what the Fed might do.
Hi, Anuj. Good afternoon. The context in which this conference is happening, obviously, we all know India has outperformed significantly despite so many headwinds thrown at this market. In fact, the theme of our conference, the Diamond Decade, is very amply reflected in the presentations that various CEOs have made. We have 15 CEO tracks. 12th one is ongoing. We have 3 more. But the mood is quite jubilant in that sense. And it is also a reflection of how India has done and what is happening globally in different geographies which are facing different troubles on multiple fronts. And that makes India stand very interestingly because our earnings have been so far very resilient. And we have seen a deluge of retail money which has come in and which has counterbalanced the big FII selling that we have seen from October to June. So yes, the mood is quite buoyant, whether it is on consumption, whether it is on financials, and across sectors, whoever has spoken. I also sense a bit of a left-out feeling in a lot of the clients whom we have interacted with over the last 2 days. And this conference obviously has 2 more days to go. So far, so good.
Left out, but we'll get back in, Gautam? That kind of feeling, or left out, now we'll stay out?
Yeah, Prashant, I mean, see, we cannot say anything with certainty in this kind of an environment because as we have seen throughout 2022, things kept changing every 30 days. In January, we didn't know that by May we will be down by 15%. And similarly, in May, when everything looked quite dire, we have recovered almost the entire losses. And FI selling, which has been the talking point for the first half of 2022, suddenly became a FI buying figure of $7 billion almost in August. But one thing remains certain, Prashant, the feedback that we are having from the corporates across different sectors. We had 60 corporates yesterday. We have about 55 today. The demand environment seems to be extremely strong. And this is the commentary which is coming out across variety of sectors, whether it is a discretionary consumption basket, whether it is financials or auto for that matter. And after a long time, we are also seeing some sort of a commentary which is coming on capex and manufacturing, given the thrust that the government has put on it, whether through export or whether through PLI. But yeah, I mean, this is something which was missing till about 2018, 2020. So yes, whether that money which has gone out comes back or not, time will tell us. But at the moment, it looks like the way macro and micro are poised for India, and with crude having come down $20–25, God willing, if it goes down by another $15–20, you might see a very different sentiment once again.
Hi Gautam, good to hear that you're saying corporate mood as well as upbeat, and that too across sectors. Since we have been chatting many times about the nifty earnings growth from here on, we had a market expert who joined us earlier today and said maybe the street is being conservative and maybe the second half of this year on the earnings front could surprise positively. Do you think that could happen? Till maybe a month or so ago, we were talking about maybe there could be a downside risk to that 960, 970 rupees EPS target.
So Nigel, we are right now around 1,000 rupees for FY24 and close to 845 rupees for FY23, which basically translates into a growth of 16-17% for FY23 versus the delivered number of 735, 740 in FY22. What can surprise on the upside in the second half of FY23 if you see a further down leg on the commodity prices, primarily crude, and then of course the offshoots of various crude derivatives. If that were to pan out, we might see some sort of a margin upside versus what currently analysts are building in. Demand surprise might be there, but it is not going to substantially change the needle on the earnings. What we need support more on is on the commodity basket, because if, for example, if you were to assume crude at $75-80, then clearly a lot of the sectors will benefit on the margin front, especially B2C sectors. And a more important point, statistically, while our expectations for full year is about 15-16% earnings growth, the first quarter itself was 23%. So run rate expectation for the rest 3 quarters on an average is about 12-13%. So there is a room for market to surprise on the earnings, and given the kind of demand environment that we are seeing now around the festive season, and the fact remains that we are seeing this normalized festive season after 2 years of disruption, you might end up seeing some upside on the earnings. But even if this 1,000 rupees of earnings is delivered without any positive surprise, we might still be talking about some upside room from a point of view of next 12 months. It may not happen in the next 3 months, next 6 months, but yes, if this 1,000 rupees EPS gets delivered in FY24 for Nifty, you clearly have a room for upside even from these levels.
Okay, fair enough. Now, just discussing some stocks, and new themes are emerging, Gautam. I believe you wrote a big report on the footwear space, I think a couple of days back. Is that a space which is generating a lot of interest?
Indeed, in fact, as we speak, there is a CEO track of Metro, which is going on in the ballroom. What we are excited about is the room for growth which is available for the organized footwear space. And this is not a 1 year or a 2 year story. This is a next 3-5 year story. Secondly, aspiration levels are quite high, and the Trend CEO during the CEO track today reflected well on it, that if you compare the consumption environment today in India versus 5 or 10 years back and not too far back, you would see that one defining change that we are seeing is the level of aspirations across cohorts of age and cohorts of income levels. And that is what is fueling the lifestyle as well as discretionary consumption environment in India. So be it jewelry, be it adhesives, be it paints, building materials, footwear, apparel, you are going to see multiple years of growth in a lot of these spaces. However, one thing I want to caution is that some of these stocks have seen a very significant up move already. So somebody who has a very short-term view may not find the space very attractive. But somebody who has a 3 to 5 year view, I think there is enough room for compounding in some of these stocks. And footwear obviously is one of that sub-themes on lifestyle consumption, where we have initiated coverage on Metro and Campus with a buy rating.
When you say 3 to 5 year view, you mean that you should be ready to own them for those many years, right? Because that's what you mean, right, Gautam? If you're buying them now, after the run-up.
Yeah, of course.
Is there, do you sense a general lack of, you mentioned that left out feeling, general lack of paucity of, not compelling ideas, but, because of just the value of these footwear stocks, right? I mean, by your own estimates, they're all, now many of them are between 40 and 50, 55 times earnings. So they're not cheap. And is that a common theme across the board? And how are investors dealing with that? Are they going down the market cap curve? So what's the solution to that? The shortage of ideas in that sense. Yeah.
So Prashant, valuation has very rarely been a comforting factor in India if you talk about consumption stocks in particular. So anybody who has to look at a high quality consumption idea in India, whether from a 1 year perspective or a 3 years perspective, valuations are obviously going to present a challenge. And therefore, I take a lot of support from the history. If you had spoken about Titan 10 years back, when the price was 300, even then the stock was an expensive stock on a 1 year forward PE basis. But here and now, 10 years later, the same stock is trading 9x higher and it's still an expensive stock. You can go on and on about some of the stocks, whether it's Pidilite or Asian Paint or Astral. There are a variety of stocks which have been forever expensive. And I mean, it's for an investor to judge what is his comfort on risk reward. But consumption as a space in India has a lot of legroom because we are still talking about a $2,200 per capita income. And if all of us believe that India as an economy is going to transition from a 3 trillion to 5 trillion in a fullness of time, then clearly a lot of these stocks will have enough room. The important thing, however, is what is your time horizon? Coming to your second point on valuation, not just on consumption sector, but even on an India basis, let me take you back 10 years. So if you look at the last 10 years of performance, MSCI emerging market has been flattish, a 0.9% CAGR, whereas MSCI India, which has been an expensive market to begin with, has given about 12% compounding return. So what it has done is the valuation premium that India has versus emerging market has expanded from 50-55% to around 112%. And I think given the kind of opportunity that India offers in a world which is plagued by so much of geopolitical headwinds, valuations are not going to come down in a hurry is my view. And therefore the investors may have to stretch their time horizon if they still want to compound money from where they are. Otherwise, of course, you know, sometimes markets will go up, sometimes the markets will go down.
Gautam, what about IT? You know, the problem with the Nifty right now is what's preventing us from hitting those fresh all-time highs is that 16 to 18% of the index is struggling. That's the IT index. The index itself is 20% lower than what it was at the start of this year. What's the feedback you're getting on IT? Is there still investor interest? And also your view on the sector from here on. More pain ahead, or do you believe we're coming to that level where it's giving a bit of a re-entry opportunity?
So we've been positive, Nigel, on IT for last 3 years. Of course, it remains a fact that this year it has not worked. 2020 and 2021, it has outperformed significantly. Where are we driving comfort in IT is purely the quality and quantity of the free cash flows and the returns that they provide to investors through dividends and buybacks. So I don't know if I had mentioned this point in our earlier interaction, but if you look at the profitability of top 5 IT companies between 2015 to 2022 and add it up, it comes to about 5 trillion rupees, out of which they have returned to shareholders 3.8 trillion through buyback and dividends. So that's a cumulative 78% payout ratio for top 5 IT companies put together over 2015 to 2022. In the history of Indian capital markets, there is no such parallel in terms of both percentage and absolute amount of capital which has been returned. The problem with IT sector, however, is it's a global sector and therefore always vulnerable to what is happening in the near term in the global economy. And there we all know there is a problem on the big markets like US, where talks about slowdown, recession, Fed rate hikes are obviously mudding the field for the IT in the near term. So we are keeping the faith. We have about 200 basis points of an overweight, but our entire overweight and entire allocation in IT is towards large cap. We have zero allocation towards mid cap IT because there the valuations clearly are at a multi-year premium, and we have seen in the last 15 years, every 3 years, mid cap IT goes into a premium and a discount. Whereas investor interest right now, as one would imagine, has moved away a little bit from IT towards banking, because banking has come back into the reckoning after 2 to 3 years of underperformance, and which is also amply reflected in the relative outperformance of banking index by almost 38% YTD in CY22 versus IT index.
Okay, Gautam, I know you have to rush for your conference, but just one point I wanted to understand from you on cement, because right now the market just wants to sort of make assumption on what is the next company on the block. Almost every sector, every stock is being bid up. Your view here?
So, Anuj, I have two different views. On business, we are quite positive. From a near-term stock price movement and valuations, we are no longer comfortable now because we have seen a huge run-up in some of these names. In fact, some stocks are trading at $300, $350 per ton on EV basis, and EV EBITDA 32, 33 times. So clearly, this sector is going to see a lot of action because of the corporate actions that we have witnessed in the last 2-3 months. Capacities will go up. Consolidation will be the name of the game, and we in fact have published a report, quite a detailed report on consolidation theme in cement just day before yesterday, So yes, we do expect a lot of action there. Maybe stock returns may not necessarily be commensurate with the news flow and action from here on, is what I believe.
Okay, all right, Gautam, thanks so much for joining in. Wishing you a good conference and appreciate you joining in with all of your thoughts. Well, as Gautam said, that cement buzz in the broader markets is getting a little bit trickier. Just around 10 minutes ago, you had Heidelberg Cement that was locked in upper circuit. Now it's come off close to around 5%. Today, when you started off trade, you had Nuvoco that was running away yesterday. The stock was up 7% or thereabouts. Now, currently, it's up close to around 1.5%. So, need to be a little bit picky and choosy on the valuation parameter as well out there, because if someone's going to be setting up capacity at $100, $110 per ton, if some of these stocks, some of the stocks in the broader markets, if they're trading at $120, $130 per ton, then, why will someone look at inorganic growth? Limestone is going to be crucial, and we'll try to get you more on that. And that's the point about Central India. Limestone is lacking out there. That's why inorganic growth can take place in Central India. So just keep that theme in mind as well. Slip into a short break. You come back as always. Nimesh will be joining in to tell us what's going on in dealing rooms, and our technical experts as well will be back with us.
For the first time in the day, we had a bit of a trend day, but just in the last few minutes, the Nifty, which after hitting a high of 17,919, when it started closing bell, it's actually come off by about 100 points. The Bank Nifty as well, after hitting high of 41,677, has come off just by about 200 points. Again, I mentioned these levels because from a day trading point of view, they would have made a difference, not from the positional trade point of view. Keep in mind, today was also the Financial Nifty weekly expiry. So there's a bit of a cool-off which has happened in few names. Kotak Mahindra Bank, for example, that stock is now seeing quite a bit of intraday sort of profit-taking. I don't want to use the word decline. SBI is seeing profit-taking. So a lot of stocks at higher level are seeing just a bit of profit-taking. Let's go close to Nimesh then for D-Street Chatter. Of course, he's again at that Motilal Oswal summit. And Nimesh, tell us what you picked up today.
Hi, Anuj. So another day of big outperformance from financials, and that's what is leading the overall, larger indices as well in today's trade again. So again, that's been a consistent feedback that there is buying in the financial names, and that's been the case today as well. I guess there's going to be a small, market at close basket buying in the Nifty 50 at a leading FIS. So, today the numbers may be skewed towards the buy side from the larger FIs. That's the overall feedback. I guess the way Indian markets are reacting, it looks like the 75 basis points rate hike by the Fed is pretty much priced in. That's the kind of mood which is there among the larger institutions. So and broadly from what I've been talking to. And the other feedback is, I was talking to some large investors at the Moti conference as well, and the overall feedback is the way Indian markets are outperforming. It looks like now there's a bit of a forced buying coming in. People have so much of left out feeling, and now they are forced to buy into this outperformance market of Indian equities. So that again is the reason why you're seeing consistent buying flows from the larger institutions, both DIs as well as the FIs. So the momentum is strong. I guess 75 basis points is priced in, and it looks like there's a bit of forced buying now from larger institutions, the way Indian markets are outperforming.
Right, Nimesh, what about on select counters? What are you picking up?
Hi, Nigel. So in terms of individual names, the first stock is HDFC Limited. Within the financials, both the HDFC twins have been relatively underperformers, but now I believe one of the largest long-only fund has been an active buyer in HDFC Limited. So that's the first stock. The second stock is Rate Gain. There are a couple of stocks which are buzzing or are unfocused, largely on back of black deals. So the first is Rate Gain. There is a buzz of a large block deal coming in very soon, and most likely the large private equity investor is going to be a seller in that block. So that's the first one. The second stock is Minda Industries. Relatively to the auto index, that stock has underperformed of late, largely in fears of a large block deal. There, the understanding is that maybe there's going to be a small block from the promoters in Minda, and hence a bit of underperformance in that stock of late. So that's the third one. The other stock is Best Agro. There was a block deal of 2% equity changing hands, and I believe last week the one large HNI investor bought, and in today's block, the feedback is that maybe one of the domestic mutual fund was a buyer in the block deal. So that disclosure will be important in Best Agro. And the last one is Max Healthcare. Again, after the large block which happened 2 weeks back, that stock is consolidating, but now it looks like there is a bit of buying back. And for the last few days, there is consistent FI buying, and that's the case today as well. And hence, Max Healthcare is also buzzing on strong buy flows.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's get in. Mitesh Thakkar, he joins us to tell us what to buy or sell today for a reverse trade. Mitesh, what do you have? It's around 3:15 p.m. today.
Yeah. Well, a lot of pharma names have given a breakout today, and Cipla is, despite the fact that we have seen some tapering off in the market, Cipla is still closing with strength at the day's high. So that's a BTST with a stop at 1084. Look for targets of about 11, 10, 15 over here. The other stock on my radar is Eicher Motors. I think that's another stock. It's just come off a bit from the day side, but the daily candle is very strong over here. So that's a BTST with a stop at about 36.89 for targets of 37.40.
Okay, so that's a couple of buy calls that we have from Mitesh, looking quite good over there. Well, Mayuresh Joshi is now joining us to make sense of some stock moves. Just looking at some names, by the way, just pull out the chart of Sri Renuka Sugar. Just the last few minute chart of Sri Renuka Sugar, that stock is up 13.5%, and big moves happening on that stock right now. There it is, and most of that move has happened post 3 p.m. Mayuresh, hi, good afternoon. Any views on Sri Renuka?
Afternoon, Anuj. No, I think the general theme that has been driving sugar stocks, including Sri Renuka, obviously has been the ethanol expansion that most of these players have been undergoing. And with ethanol expanding at a significant rate and capacity as well, we're probably looking at realizations improving quite significantly. On the other hand, on the international scenario, what you're looking in terms of the Brazil crop and the international prices per raw sugar, along with what we've probably seen both in terms of the MSP and the FRP prices when it comes to sugar here, I think the sugar inventories for the next sugar season as a carry forward should be far lesser than we've probably seen in the last 2 years. And with the ethanol mix, both B and C variants as well, and better realizations, that is effectively going to play out very, very positively in terms of their balance sheets as well. So I think all these factors probably aiding sugar stocks, including Sri Renuka as well.
I mean, from the day's high, it's actually a decent kind of pullback, although it's still up 180 points, 190 points. So you'll still describe this as a very strong market, but it was stronger. The high was at about 1255 or so. Around that time, about 17,900 or so, and we're at about 75 odd points lower. But the bulk of the fall has started at about 3 o'clock. When the market started giving up some of these gains. By the way, in the US, you've got the 10-year, which is pushing above the 3.5% level, and the 2-year. I'm talking about US Treasuries, government securities. The 10-year, the 2-year is back above 4%. It was above 4% overnight, and then it kind of closed right under it, and we are seeing a push up once again. Now, Mayuresh, hi, afternoon. Thanks very much for joining in. What else is on your radar, Mayuresh, in terms of things that one can bet on from here on? I mean, we've seen a very sharp move, and as Gautam Dugat of Motilal was also telling us, I mean, valuations are punchy across the board, so you have to have time on your side, a slightly longish view from here.
Well, absolutely. Afternoon, Prashant. No two ways about it. So I think the two themes that we have been consistently pursuing are capital goods and hotels and leisure as a space. Yes, valuations have become a little bit expensive considering longer term averages, but I think these two themes should work wonderfully. I think out of these two themes, the ideations that we've got at MarketSmith India, action construction equipment is something that we like from the capital goods equipment theme. Cranes obviously a significant component in terms of their top line. Construction equipment, agricultural equipment and material handling substitute almost 25-30% of the remaining revenue. Balance sheet looks very, very strong, cash on books. You've probably seen top line growth improve in this quarter compared to the COVID period last year as well, with margin expansion happening from 10.1% last year to 12.55%. Now in that transcript, and as we obviously know, I think the kind of capex that will come through, whether it's ports, roads, highways, housing, is going to be quite significant, and equipment manufacturing players, including ACE, are going to benefit quite significantly. No significant capex, and sufficient amount of land on their books. So I think Action Construction is something that we continue to like. The hotel and leisure theme, pure unlock theme, still continuing at a very, very rapid pace in terms of price movement across stocks within this space. But Mahindra Holidays is something that we still continue to like at MarketSmith India. Specifically, I think what management has alluded to in their results as well. Significant expansion in terms of rooms. Member additions have been very, very strong in northwards of 3,800, cumulative base at 4,70,000. Cash-rich balance sheet at 1,172 odd crores onto their books. PBT margin expansion to 15% from 10% a year back. And obviously, I think all these factors leading to operating leverage in terms of strong earnings delivery and all the parameters that we probably track. I think because they're similarly priced, I think we've got a risk management strategy in terms of stop losses, because that's what we do at O'Neill, of around 260 or 262.
Got it.
So I think
okay, Mayuresh, we need to take a break. But before we do that, I just want to highlight the reason the market's seen just a bit of a knock, about 100 points from the highest point, is mainly because of two stocks. One is Reliance and the other is Infosys. Pull out Reliance, and Reliance actually is now in the red. Not by a lot, but just look at that last 10 minutes of trade. It's come off quite significantly. And Infosys, I mean, this is a trade which has been playing out on Infosys and on IT stocks. I made this point in the morning as well, that IT is a space where the rallies would be sold into and have been getting sold into. So Infosys has turned in the red. So these two stocks, and they both have significant weightage on the index, both among the top 3 weights in the index. So that's why you're seeing just this bit of profit taking. We'll take a break, we'll come back and of course start wrapping up the market action for the day.
That are moving lower. India Cements, well, that one's moved to the low point of the day after the big run. Keep in mind, it's had a big run and now there's some money getting taken off the table. So keep that in mind. Ambuja Cements as well from the high point of the day has come off considerably. And Heidelberg Cement is now at around 217 rupees odd. It was locked in upper circuit with a gain of close to around 20% from 233. It's now to around 217. So keep an eye out on a few of these stocks. But before we wind down, Mayuresh, I wanted to ask you about granules. Are they selling or not? Well, the promoters say no. Some part of the street says yes. But the stock today particularly has come in for a hard knock. Any view on that name?
Afternoon, Nigel. No specific view. I think it's biased and is based on a lot of news items that is probably moving around it. But again, I think within this space, the large cap name, like we discussed a week back as well, I think Cipla is still something that we'll continue to like. Yes, I think repeat observations seen at its Goa plant. But we still believe that the product portfolio that they probably have, the complex inhaler, and the time launches that they probably got for the sale, along with peptides, which is a good high margin business for the company as well. And I think successful resolution in terms of these three repeat observations should augur well in terms of both margin expansion that can probably happen, that has been lagging over the last few quarters, and expansion in terms of earnings as well. So no specifically on granules, but Cipla as a global view is something that we like.
Okay. Lastly, Mayuresh, are you buying this dip in Canfin Homes?
No, not really, Anuj, not at this point.
Okay. Any other stock that you like in this space?
So within the NBFCs, AU Small Finance Bank is something that we like. I think it perfectly fits the cancelling parameters and the O'Neill methodology as well. Strong AUM growth. You've probably seen GNPAs, NPAs come down to 1.96, 0.56 as well. Strong addition in terms of the CASA ratio, because if you probably look at the TD ratio along with the CD ratio at 39% and 89% as well, that augurs really well from a balance sheet perspective, and very, very strong return ratios, 1.5% ROAs and 14% ROEs. So I think something from the product.
Mayuresh, thanks a lot. We will let you go on that note today. Thanks a lot for joining us. Let's start wrapping up the market action for the day then. And, well, you know, despite the last 30 minutes of minor profit taking, it still has to go down as a really, really strong day. The market opened gap up. After that, gave you another 100 points. And towards the end, shaved off those 100 points. That's it, but still close at almost that gap level on the Nifty. In terms of individual names, today you had some big moves in pharma names, so healthcare names like Apollo Hospitals, Cipla, Sun Pharma, and Dr. Reddy's. A couple of these auto names also did well. Then names like Eicher Motors and Tata Motors, ICICI Bank, Axis Bank, HDFC, HDFC Life. These are a few other names which did well in trade. On the downside, Infosys and Reliance, minor profit taking is what you saw. So these are a few names that stand out. But Prashant, the broader market was very strong.
2:1 advances to declines ratio. So just a bunch of names. Apollo Hospitals was up 6%. Renuka, we were talking about 12%. TVS Motor was up 5%. Adani Wilmar 5%. Metro Brands was up 9% by close. Cipla surged 6%, especially in the last 30 minutes. Advanced Enzyme started 10% higher, went up 12-13, ends 9% in the green. Advanced Enzymes. JK Lakshmi almost 6% higher. Heidelberg 12%. There is Tube Investments, which was up, I think, 5.5%. MCX, the commodity exchange, was up 5%. Crompton was up 6%. Crompton Consumer. Quest Corp 5.5%. CG Power up 6%. Jubilant Pharma 10%. I mean, so many names. Just going down the list as per volumes, not really gains. But you get the broad idea. Kim's, that is the hospital chain, was up 5.5%. Atul Auto, TV Today 5% higher. Mirza International up about 6% as well. Nigel.
Well, a few more notable gainers actually from the broader markets. You had DB Realty that was locked with a gain of 5%. Sanghi Industries as well locked with a gain of around 5%. These have been consistently higher. Shilpa Medicare, well, the management sound optimistic that they can unlock some value, whether it's by doing an IPO or doing a private placement in their API arm. So that one as well was up close to around 4.5%. HLE came back on the list. So HLE was up close to around 5%. HLE Glasgow. Remember, that one has corrected big time, half from the top. But in today's trading session, did stage a bit of a fight back. So fair to say that we ended closer to the lower end of trade in today's trading session. We ended with a gain of around 1% odd, but we came off 150 points from the day's top. The Nifty Bank as well did come off from the day's top, but there were plenty of action actually from the broader markets, and the mid-cap index outperformed today, up close to around 1.5%, with more number of stocks advancing in comparison to the number of stocks that were declining. Well, we'll wrap up on this edition of Closing Bell, but don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.